Good morning, ladies and gentlemen. This is Butch Shorak. It's Options University, and it's Monday, the first week in December, December 3rd, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading options. As always, do not trade with money that you cannot afford to lose, and we are not implying or guaranteeing any profit. With that thought in mind, looking at the coming week, what kind of economic announcements are we going to have coming? Well, as we look at it, we see that Monday, today, we have PMI, we have ISM, we have construction spending, all those things which we get as we come into the new month. On Tuesday, we have Goldman store sales and motor vehicle sales taking place early in the morning. And then when we get to Wednesday, we got a couple of the big ones. ADP employment report at 8:15, productivity and costs at 8:30, factory orders at 10 o'clock, ISM non-manufacturing index at 10. Looking at Thursday, we have jobless claims, which occur every Thursday morning, and we have nothing further on Thursday, and then we come into Friday and we have the big number telling us about the employment for the last month. What will the employment numbers be? What will that percentage of unemployment be as we look back on November? Looking at consumer sentiment, we'll look at that at 9:55. So quite a bit of news taking place on this first week of December of what should be the strongest quarter in the entire year. However, it's not sizing up that way. Let's take a look at what's happened to us after the pullback, looking at the SPX. We see that we have changed trend. We went from an uptrend from last summer. Then we switched over to a sideways trend, and what we now see is we have a crossover there between the 30 and the 50-day moving average, the 200-day moving average sitting there, and we now are currently in a downtrend. All right, in this downtrend, we are now in an up cycle, and you see that what we have done is we've come up and we've bounced against this 50-day moving average, which is now currently acting as a bit of resistance. It'll be a crucial week as to what our trend to see if we're going to get a change in trend and possibly go sideways or even go into an uptrend as we finish into the end of the year. Will there be a Christmas rally? Where are we? What's coming? Only a matter of time to find out what that case may be. All right, let's take a look at the week in a bit more detail. But remember, overall, the trend is down. And the cycle, the short-term cycle, is up, and we are sitting at resistance as we are sitting right at the 50-day moving average. Well, this week will be a crucial week to tell us which way we are going next. Are we due for a pullback? Most likely we are. We'll see whether it occurs this week. Watch for it carefully. What kind of strength did the market show us this week? Well, if we look at the 5 days of the week, there's Monday through Friday. We see that Monday we started out with a little bit of hesitation in the market. Things weren't looking that great. And when it was all said and done, we basically finished almost where we started the day. Comparing it to Friday, which was a huge day to the upside, we went absolutely nowhere on Monday. Tuesday started out quite weak, pulled back quite a bit, and as we see, we closed down for the day, but it really had an inside day. Wednesday, we had news come out that caused the market to jump. There was news from Boehner, there was news from Obama, talking about the fiscal cliff, and the market received it very nicely and ended up with an update, giving us a higher high after bouncing off early news in the day where it had pulled back to the 200-day moving average. Thursday, we opened with a bit of confidence and moved higher for the day. And Friday ended up with another inside day as we find some kind of resistance sitting here at the 50-day moving average. Currently the market's at 1416, a position of resistance, and so we'll see whether we're going to pull back this week and end up with a lower low and lower highs, or whether we're going to go up this way for the week and get higher highs and higher low and approach that number of 1431. Resistance also sitting there at 1425. So those are our targets if we bounce to the upside. Watch very carefully as we look at the first hour of the morning, see whether we end up with a higher high or a higher low. In the past week, we had mixed news coming out of Europe, mixed news because of Greece. International Money Fund and Euro finance ministers had a difficult time reaching agreement on Greek aid. And so we saw that as we went through the week, we had a little bit of news controlling where we were going. Didn't gain all that much for the week, and we'll actually see what those numbers are as we look at the indexes in the first part of our market forecast. Looking at the Dow, we see we ended up with the very same type of pattern. But look at the index. As we look at the SPX, notice that we're up there having resistance at the 50-day moving average, well above the 200-day moving average on the S&P. Looking at the Dow, we have a bit of a different picture as you see that we are now sitting at the 200-day moving average and the 30-day moving average, which had a crossover this week, which is not a very strong signal. So having trouble clearing that 200-day moving average on the Dow Jones Industrial Average. Let's see how the NASDAQ compares with the S&P and the Dow. Looking at the NASDAQ, we see that, again, the same type of pattern where we're in an upcycle in a downtrending market. We are above the 200-day moving average and sitting at the 50-day moving average where we're finding our resistance at this particular point. Looks much like the S&P, except that the 200-day moving average is much closer to the other two averages. Russell 2000, which is basically an index that should show strength mid-month in December and should be a switch over to small cap stocks in the first month of January. We'll see whether that follows through. Let's take a look at how that sits relative to these averages. You see that we've broken through the 200-day moving average. 30-day moving average is coming down, getting ready for a crossover, but it may not get it if the NASDAQ continues on up, as it actually is sitting above the 50-day moving average and showing a little more strength based upon its average move. How do we sum all that up for the week? Well, let's take a look at our indexes and see what we did for the week. Looking at the Dow, NASDAQ, S&P 500, Russell 2000, we see they're all in positive numbers, from 16 points up on the Dow to 43 points up on the NASDAQ, S&P up 7, Russell up 14. Percentage-wise, the biggest gainer for the week was the NASDAQ, up 1.5%. Let me stand corrected, as the Russell 2000 was up 1.8% for the week. And, of course, the follower, which was sitting right down by that 200-day moving average, is the Dow, which came up for the very least of all the averages. Year-to-date, all of them still in positive numbers. Only the Dow sitting in single digits at 6.6%. The rest of them still in double-digit growth for the month or for the year, which shows us good growth for the year in the overall indexes. How much fear is there in the market, and exactly what kind of fear do we have there? Well, let's take a look at the VIX and see what our fear index tells us about these markets. And we see, looking at the VIX, we're down at the bottom of that range. Basically, we're talking about a range between 15 and 20, which is our normal range, and we're not showing any great deal of fear in the market as we continue with this sideways move in the market. VIX showing us no great fear, and us showing actually a little bit of strength this week as we moved up so quickly from that 200-day moving average on the S&P, which we looked at before. Now let's take a look at some of the sectors that we have. Let's take a look at the bond sector. We'll look at TLT, our 20-year Treasury bond, and we see that it is sitting below its previous high earlier in the year and sitting above the 30-50 day moving average, actually in a positive formation, as the 30 is above the 50, which is above the 200, but not showing any great strength heading towards some of its previous highs that it had been in earlier in the year. But for the week, where are we? Basically sideways. All right, let's take a look at the financial sector, looking at the XLF ETF, and we see that following very much the same type of move, going sideways for the week, did dip down, didn't get down to the 200-day moving average, showing relative strength to the S&P, and basically trading right at the 30 and the 50 to see whether we're going to break to the upside and have a strong Christmas rally. Seems like we normally would expect that, but we'll see if the actual election may have befuddled our Christmas rally for this year. Next, taking a look at oil, we see that as we look at oil, it has gone nowhere. It's been going sideways since the end of October, not showing us any great strength, and certainly has been overall in a downtrend with the 200 above the 50, which is above the 30. So not showing much strength in oil. Our safe haven gold, what has it shown us as the week went by? And we see that some of the fear came out of the market, and look at what happened. Gold price went down. So what kind of volume did we have this week? Let's take a look at the spider and see what kind of volume that ETF had as the week went by. And so as we look at the spider, we'll see, there we are, I'm sorry. Let's go back to that. As we look at the spider, look at it. It looks just like the SPX, exactly what it's supposed to be. Notice last week where we had decreasing volume as the week went by. And then we come into the 5 days this week. We continue to move sideways and then finally move up. And we did it on basically about average volume after we got through the first 2 days. So SPY showing us kind of average volume for this particular time, and showing us that no big volume surges as we move up higher, but still following with average volume. So that is the indexes, major indexes, and some of the sectors that we looked at for the last week. For those of you that are gold members and would like to see some of the stocks that we watch, hang around. Welcome to your gold membership, and we'll take a look at some of our favorite stocks to see which of these stocks, how they responded with respect to a market that actually finished up for the week. So with that thought, gold members, hang on. The rest of you, we really appreciate you sitting here and watching our market forecast. This is Butch Shorak. It's Options University. Monday, December 3rd, 2012. Last month of the fourth quarter, which should be the strongest quarter of the year, but seems to be a little befuddlement going on as we have had the festivities involved with an election year. So thanks, Butch Shorak. And to our gold members, welcome back. Let's take a look at the week to come. Looking at where we've come from, a week ago we started right down there, and we see that we've had a bit of a shift, sitting currently at 14.16.18. So and we're sitting at resistance at this current time. Next target up there is 14.31, then 14.40. Plenty of room to the upside, as we see there is potential to go higher. Looking at the last 3 months, we see that our previous high was up at about 14.75, somewhere in that range. So that's certainly where we have a target for. We could go there if we end up with some kind of huge Christmas rally. Personal thought, right now we're sitting with a little resistance up here. We're going to see whether we're going to have a Christmas rally or not. May get a little sideways movement the first couple days of the week as we come into some of those big numbers that took place last week. Overall, if we look at last week, what kind of, and last month and where the market currently is, earnings aren't coming in particularly great. A lot of fear going on over Europe. Certainly fear about what's going to come when we have all these big taxes and tax increases coming through at the first of the year. What effect will it shove us into a recession like much of Europe currently is in? Whatever the plan is intact now that Obama is again in control for the next 4 years. If you look at the results over a 4-year period with a Democratic president, generally you have a stronger market than you do with a Republican president. Also, if we look at the first year after the presidential election, basically the year is pretty much a flat year. So we'll see where we follow through as we go into the first year of Obama's second term. With that, let's take a look at Amazon and see what it did during the week. We talked about this 200-day moving average. We talked about waiting for this thing, that it was basically performing with the overall market. And look at this thing run, just kept right on running. Very few days where we had lower lows, and the day just keeps moving up. So as long as the market moves up, Amazon headed for that area of around 265. Another 13 points from Amazon's future. Next, we'll take a look at Apple, the famous Applenomics. Let's see what's coming with Apple. As we see, Apple after earnings has done little or nothing, had big down pull, finding resistance at this 200-day moving average. Will Apple return to that $700 figure that we looked for, that we got earlier out of Apple, as it only knew one way, and that was up? Next, let's take a look at AutoZone, see how the auto parts company is doing. Coming into earnings, are we going to get an earnings run? Well, we'll see. Not a whole lot of time for that, as AutoZone's earnings are coming out in this coming week. CMG, the food company, let's see what this food company did, as it's gone absolutely nowhere, not really heading up with the overall market. Might look at a potential condor with this kind of a stock, as we have a nice sideways move taking place with CMG. Next, let's take a look at Google. See that Google had a bit of a run this week and did not pull back to that 200-day moving average. So we got a higher low and a higher high. Currently, we'll be looking at that 50-day moving average, performing a little below the overall market, but Google had a nice little run, escaping from that 200-day moving average with a nice bounce off of that support level. Looking at Green Mountain Coffee, earnings certainly look good. It was well liked by Wall Street. Had a huge gap up with a volume, and we see that on a pullback, looking for a higher high, higher low. There certainly is a potential for an entry on Green Mountain Coffee Roasters. May have gotten rid of some of that bad press they got from a little of basically what amounted to inventory kiting. Next, let's look at ISRG. Looking at ISRG, showed good strength since the last earnings, and bounced off that 200-day moving average a couple times. Let's see if it bounces again. If you start getting higher highs and higher lows, look for ISRG to return to that 550 if we have any kind of Christmas rally whatsoever. Next, we'll take a look at one of the financial stocks, the ones that benefit from the QE3, and we look at MasterCard. Look at that. New 52-week highs, new all-time highs for MasterCard, as we're in a complete breakout. Strong stock, strong volume. Look for a little bit of pullback by MasterCard on pullbacks. Maybe something you might consider for your portfolio. Looking at McDonald's, the other food company in our favorite list of stocks, are running into resistance here. As we see, it's approaching that previous high, not showing the kind of strength it has. Hasn't closed that gap from earnings, and was not well liked with what earnings showed us with McDonald's. Next, let's take a look at Nike. Then we see that had a nice run, hit that 200-day moving average, and boom, pulled back. As we see that this stock was not ready to break up through that 200-day moving average. Nice run with the overall market, however, as we got a nice little move up, breaking through some of that previous resistance shown by our favorite yellow zone. Let's take a look at some of the travel companies. Looking at Priceline, we see that it has popped through, gone to new highs. Priceline earnings were liked. This is a stock that is showing great, good relative strength, the overall market. And if you see the market going up, this is a stock you want to look at as a bullish trade. W.W. Grainger, which had a big pullback off of earnings, we see that still mired in getting a higher low and obviously a higher high, but well above all of its interesting moving averages. And so waiting for this to give us some kind of idea of where it's going as time goes forward. Once a company loses that momentum, which this company certainly had, it's difficult, takes a couple quarters for it to get it back. So with those thoughts in mind, these are the stocks and how they responded to this nice little move in the market we've had in the last couple of weeks. And so this is For Options University, Butch Shorak. It's Monday, December 3rd, 2012. We're in the holiday season. Should be the strongest quarter of the year, but it looks like it's been mucked up a little bit by some of the festivities and the run from our presidential election. So with that thought in mind, we will see you next Monday, December 10th, for Market Forecast.